Good morning, everybody, and welcome to this CITFA webinar on management accounting and public service decision making, which in particular celebrates the recent volume published jointly with CITFA by Malcolm Prowle, who is one of our panelists for this morning. My name is Roger Latham. I am a past president of CITFA. I was previously in my career in local government, the County Treasurer and the Chief Executive of Nottinghamshire, and past President of the Society of County Treasurers. I have been retired for a while now and have been working with Malcolm, both at Nottingham Trent University and Gloucestershire University, where Malcolm is a visiting professor and I'm a visiting fellow. So we have collaborated in the past on books, and I'm delighted to be able to chair this panel on behalf of Malcolm and on behalf of CITFA. So you have the panelists, you have the screen with the panel. You have the panelists there, and so I'm going to ask them briefly to introduce themselves to you, beginning with Malcolm, since Malcolm, this is a celebration of your publication of your book.
Okay, thanks very much, Roger. Right, good morning, everybody. Yes, my name is Malcolm Prowle. As Roger said, currently I'm a professor at the University of Gloucestershire, and I previously worked at Nottingham Trent University. Prior to academic life, I had extensive experience in public services, mainly in local government and health, but I also worked for quite a few years for two of the big consulting firms, PwC and KPMG, which is where Philip Davis and I met many, many years ago. And I've done various other things, like I've been a financial advisor to a couple of select committees, to the World Health Organization and various professional bodies. So I'll hand over to Phil.
Yeah. Philip, you have a very varied career.
Thanks, Roger. Thanks, Malcolm. Yeah, so I'm Philip Davis. I guess I'm sort of currently semi-retired, doing a bit of freelance consulting work, and I sit on a couple of boards as a non-executive. But my career has mostly been in the health sector. I started off actually as a UK civil servant, as an operational research analyst in what was then the Department of Health and Social Security. That was followed by 14 years consulting, where I met Malcolm, in the UK and latterly in New Zealand. And then I went back into government, held deputy CEO positions in the national and state health administrations, first in New Zealand, then in Australia. And most recently, up until 3 years ago, I was the permanent secretary, chief executive of the Ministry of Health in Fiji, in the Pacific Ocean. And in between all that, I managed to spend a bit of time as an academic. I was professor of health systems and policy in the University of Queensland for 3 years, and also had a couple of years with WHO headquarters in Geneva. So I've changed hemispheres regularly, changed sectors quite often, and I think uniquely amongst this panel, I'm not an accountant. Thank you very much.
Thank you very much, Philip. And can I introduce Lisa, who is works at CITFA, and Lisa, please introduce yourself to the audience.
Okay, thank you, Roger. So, as Roger said, I'm Lisa Forster. I work for CITFA as one of their consultants and financial trainers. And unfortunately, unlike Philip, I'm solely in within this hemisphere, not as much international travel at all, but I deliver a lot of CITFA's financial management code, the financial management models, any training, finance business partnering, management accountancy. So really very much what we're going to be talking about today. And I've been with CITFA for 12 years, and prior to that, I've worked in local authorities doing a wide variety of roles, but all with a financial focus. Thank you.
So there you have, there are your panelists, a wide range of experience and current knowledge of the important things. So let's move on and let's look at the first of the questions which arises in the book. What exactly are we talking about in terms of management accounting? Well, obviously we're distinguishing it particularly from the financial accounting, the bit that was customary done in public bodies, looking at budgets and looking at the final accounts. We're looking at the central, the decision-making elements the accounting that's necessary for them. Now, as we know, public services across the world are facing the twin pressures of increasing demand for services, coupled with very tight constraints. And the budget of yesterday has not changed that in any way. So we have to look at the major policy challenges that we're facing. We've got climate change, the impact of disruptive events like the COVID-19 pandemic, and they only add to the kind of pressures that we have been facing for a number of years. And in these economic and social conditions, public service organisations, wherever they may be located, are effectively decision-making about service delivery and the use of scarce resources. Such decision-making requires that we make high-quality financial input using state-of-the-art financial management accounting practices. However, the practice of management accounting is still evolving at a fairly dramatic rate, and hence the timeliness of this particular book. On the one hand, we've had a growing need for relevant financial information and guidance in complex areas such as environmental accounting, inter-organizational cost management, strategic analysis, and so on. On the other hand, management accounting is being impacted by big technological developments, such as the availability and analysis of big data analysis, artificial intelligence, and so on. We can be certain, I think, that practicing management accountant 10 years from now will look very different from management accountant of 10 years ago. And hence, the student and the practitioner of management accounting need an awareness and an understanding of the changes in practice that's already taking place and will impact on them in our working lives coming forth. And this book is one way of helping to provide that. So in terms of management accounting, we're looking at the way big organizations take big decisions. Now, sometimes it seems that decisions are made, particularly in political organizations, without the necessary evidence. But it's our job as accountants to make sure wherever that we can, that the best information is available to decision makers so that they take the right decisions or the appropriate decisions based on information and not on simply assumptions. So it's a key area for the future, given the kind of thing. So Malcolm, let me ask you then, how does the management accounting in public services differ from that in the business sector?
Okay, thanks, Roger. Well, I think the simple answer is that it's not as great as we might think it is. I think one of the problems when we teach management accounting and when we read books on management accounting, they're often written as if the only thing we're dealing with is companies which manufacture physical goods, the manufacturing sector. Now, if we look at the economies of most developed worlds, you know, we'll see 80–85% of their economies is actually service industries, not manufacturing. But even so, we tend to put this focus on manufacturing industry. Now, of course, public services are part of the services sector. So in many ways, they have similarities to their counterparts in the private sector. If you take hospitals, for example, at an operational level, you know, a public hospital is run broadly similarly to a private hospital, similarly public school and a private school. So in some ways, the differences are not that great between public service organizations and private service organizations. There are some big differences, of course. One is, of course, the different objectives. In the private sector, we are going to be concerned with the usual financial things like profitability, return on capital, market share, these sorts of things, where it's going to be very different in public sector, public service organizations, where we're going to be concerned with things like effectiveness, value for money, these sorts of things. So there are quite big differences there in objectives. We also have to recognize that in public services, we do work in a political environment, and there are constraints on this. So if I give one example, you know, the idea of life cycle costing. Now, it's a very useful tool for, you know, minimizing costs, but we often find that we cannot apply life cycle costing because there is some constraint by central government on what we are or not able to do. So we're not always able to make the most financially literate decisions. And I think the last thing to do is to mention is the fact that we try to work much more collaboratively in public services than perhaps the private sector does, where different agencies, we are trying to get different agencies like health and social care to collaborate and cooperate much more than they have done in the past. So I think those are the major differences. But I said there's always a danger of overstating the differences.
Philip, from your experience, is there a big difference between how business and public sector address these issues?
I think Malcolm's right. I think there's certainly a convergence. I mean, I've, as I mentioned in my intro, I've actually sat on the boards of a number of not-for-profit limited companies. So, seen quasi-private sector accounting, but also had the privilege and the pleasure of working in government in New Zealand. And I'm sure yourselves and many people listening in will, be aware of some of the very radical changes that went on in the New Zealand public sector in the late 1980s, early 1990s, which was more or less as I arrived. And there, for example, there was a period where the public hospitals were actually set up as Crown-owned companies. So, their entire financial regime was effectively that of a private sector organisation with shareholders, two shareholders who were the Minister of Health and effectively the Minister of Public Hospitals. So, and that having been very close to that, that worked. So I think Malcolm's right in that the differences, well, there are differences, and I think the political environment, we'll come on to that later probably. The political environment's obviously very significant, but I think to put an artificial divide between the two, if there is a divide, at best it's a fuzzy one, I would say.
Right. Lisa, have you got any take on this distinction?
No, I think, again, I would echo what both Malcolm and Philip have said, that I think we are converging to very similar techniques here. And I think what we're seeing in the public sector are some of what the private sector may have done being much more relevant, things like the costing. And I know, Philip, you just mentioned sort of the companies and coming to a more commercial perspective on some issues. And I think we're seeing that to a much greater degree within the public sector because of such as austerity and the Localism Act, things that are allowing that to happen. So I think there isn't, as you say, this artificial divide anymore. It's much more coming together as a single accounting strategy, really.
Fine, thanks. Should we move on to, I think we've skipped the next slide. I think we've just been chatting about. We've just discussed this one. Shall we move on to a third question then, which are the kind of challenges that face public services and have a look at way management accounting can assist in dealing with them. We probably are all terribly aware of the fact that the way I describe this to my own way of thinking is we've had in sort of the development of the sort of capitalists, because I'm a not only accountant, but I'm also an economist by training and statistician. We've had three sort of principal crises. We had the bank crisis in sort of 2008-10. We're in the middle of a pandemic crisis at the present time, and we have a climate change crisis to come. Now, all of these are going to involve and have involved making big decisions, decisions which are going to affect us for the future. We're very much aware that after the financial crisis, there was a substantial period of austerity. And during that period of austerity, public services came under enormous pressure, pressure to do more with less. And that also means that the pressure on good management accounting to actually achieve results and give proper information upon which key decisions can be made. You can't afford to waste when you have a low growth and when you have a real constriction on your basic resources. We know that the pandemic that we're facing now is not going to be simply over. It's going to continue and become an endemic thing. And there is going to be what is referred to rather that cliche of the new normal. Now, we're still getting to grips with what that new normal could be, but it certainly could involve disruptions of people's lives, economy, as we have seen, perhaps not as drastic for the future, but that again is going to put tremendous amount of pressure on organisations, not just the NHS, but on social care, which again needs to be sorted out. So there are big challenges that arise out of that. The climate change challenge is even bigger. It requires whole-scale changes to the way that public services are delivered. When I was treasurer in Nottinghamshire, Nottinghamshire Pension Fund was one of the first to start developing its thinking about environmental elements of its investing, to make sure that the pension fund was invested in a way which was environmentally sound, which was ethically sound. We still, I think, face those challenges for the future. And again, management accounting stretching beyond simple costing, stretching into the key decision-making of strategy for the future is important because, again, as far as climate change is concerned, we can't afford to get this wrong. So good quality management accounting is going to become absolutely essential in that. So, that's my take on the kind of challenges which are facing us for the future. Malcolm, Lisa,
yeah.
Philip,
Can I add one thing, Roger? I think it needs to be mentioned. It's effectively the legacy of the pandemic. And if we think about some examples of this, we know that children have lost virtually half a year, or will have lost about half a year from schooling completely. And we know from education research that will impact especially badly on those from poor families, from socially deprived families. We have the backlog of non-urgent care in the health service. We know the waiting lists have gone up. So there's a whole sea of people waiting to receive treatment in the NHS. We also, I don't think we've got much data on this at the moment, but we also expect, quite an epidemic of mental health problems consequent on lockdown. And this sounds all very gloomy, I'm afraid, but talking to a colleague of mine who's a former senior police officer, they are concerned about a backlog of social problems consequent on the pandemic as well. Now, add all those together and others, and there's a big legacy. Even if the pandemic ends tomorrow, there's a very large legacy of social and public service problems facing us.
Yeah. Lisa, how's CITFA facing up to this change?
I think what we're trying to do is to equip the finance practitioner with as much as possible so that they've got the right information to manage current services and determine whatever those future models of provision are going to be. And as Malcolm just mentioned, we don't actually know what that's going to look like on, as you said, when we get to some sort of new normality. So costing information is not the only thing we need to do, but that's quite critical because that will be important to the decisions that we need to make moving forward across different services, different pathways, different organisations. So we know what those financial baselines are and where and how they will need to be reset following the pandemic. So what CITFA is trying to do is look at these issues, really focus on what needs to change moving forward. Also looking at not only the financial, but the performance data and analysing the budget, for example, that came out yesterday. What does that do to impact on public sector? So, for example, the changes in business rates that he mentioned yesterday, we've already seen a statement going forward on that this morning from CITFA. So I think that's the way we can try and equip people as best as possible by providing them with the skills, but also providing them with the context, the literature and the material to understand those key issues.
Yeah. Phil, if you've had quite a lot of experience in the health thing, do you have a particular take on the outcome of the current crisis and the kind of pressures it's going to have for accountants for the future?
Yeah, I think what we're going to see, and people might argue this is long overdue, and in a sense it's consistent with the government's, the so-called levelling up agenda, is an increased focus not just on the level but the distributional aspects of services, of outputs, of delivery. So this will work for you, Roger, as a statistician. But not just looking at the mean, but looking at the variance. And I think the ability to reflect in policy making and therefore guided by financial metrics or other metrics, issues of geographic distribution, racial and ethnic variations, gender variations, will become increasingly important, and make sure that in the sort of the recovery effort, that the benefits are shared, or the pain is shared equally and fairly across different communities. And in fact, you could argue, going back to the previous question, this is an area where the public sector accountant might be better positioned than the private sector accountant, and we may indeed see some of those considerations of if you like, distributional impacts moving from the public to the private sector in terms of how decisions are made and how policies are set.
All right, thank you, Philip. Let's move on to another question at this point. Looking at this sort of management accounting role to play in public decision making. And Malcolm, I'm going to ask you to have us with that. But just as a word to our audience, we're obviously making comments here. You probably have got thoughts of your own. If you'd like to pop those into the chat and any questions or comments that you want to make, then we'll hopefully pick them up towards the end of this panel session. Malcolm, say a few words about this for us.
Okay, Roger. Yes, well, I think this comes to the core of what management accounting is about. It's about supporting and improving decision making in organizations. Now, we know any public service organization makes countless decisions. Some of them are weekly decisions, some are monthly, some are annual decisions, some of them are short term, some of them are strategic decisions. Now, we often talk about rational decision making. And if I give you an example, if I went out and paid £30,000 for a 10-year-old car which kept breaking down, that is not a rational decision. That's a pretty stupid decision, isn't it? That's a sort of irrational decision. But we do talk about rational versus non-rational decision making. Now, what we mean by non-rational, we're not saying it's like me paying all that money for a car which keeps breaking down. It's not necessarily that they're bad decisions, but they're flawed decisions. Part of the decision-making process is incomplete. Possibly we don't develop enough alternatives before we think about which one we choose. We don't get data on all these alternatives. We don't decide beforehand what are the criteria by which we're going to judge the various options. We don't analyze the data. We don't have time to think through all the implications for a variety of reasons. So these are not necessarily very poor decisions, but they are flawed and they're not necessarily optimal. Now, I can give an example of that here without naming names. I had a PhD student a couple of years ago who did work on strategic decision-making in the health service. And, we may like to think that these decisions are very rational and they're based on evidence and what have you. But for a variety of reasons, it didn't look like that. It looked as if decisions were often being made in the absence of evidence, based on the views and prejudices of the people who were there at the time, and all these sorts of things. So I think it's a key part of management accounting to try and improve the decision-making process by ensuring some of these things are in place. We have enough alternatives, we collect the evidence, we analyze the evidence, etc. So I think, as I said, I think this is the key to what management accounting is about. It's about how we improve public service decision making, particularly in the light of the economic pressures you've talked about, Roger.
Yeah, thanks, Malcolm. Can we just go on to the next question, because I think it's relevant to the way Malcolm's just left that part of the conversation. About the role of management accountants in the publishing making process. We've talked about the process, we've talked about the data, talk about the people, the management accountants who are there doing that. Philip, what's your take on that? Are there deficiencies in the way the role is fulfilled at the present time? Things that need to be improved?
Yeah, I mean, the first point I'd make is, I was surprised when I got my copy of Malcolm's book. I thought, this is an accounting book. It's going to be really boring. No offence, but it's actually, I was really struck by the breadth of what is covered there, and I think quite legitimately, it goes into areas of public service reform. It goes into areas of strategy, and I think that is a perfect example of the breadth of role. But if there were a deficiency, and this builds very naturally on what Malcolm was just saying, I think it is perhaps a naive view on how policy gets made in the public sector. I'm sure we've all seen the circle, the policy making cycle. Well, I can tell you, it's not like that in the real world. There's a quote, I think it's Bismarck, famously quoted as saying, laws are like sausages, it's better not to see them being made. And I think you could say the same about policy. You know, the process is one of negotiation, of horse trading. I work for a minister, I won't say which minister, I won't even say which country, but the joke amongst the senior management team was the key thing you needed to know is who that minister was having dinner with on Sunday evening, because you could bet that would be what was on the agenda when we met with the minister on Monday morning. You know, if the minister had had dinner with a surgeon, then the issue of the day on Monday would be how we fund surgery. And that's slightly cynical, but I can certainly quote you examples where that was actually the case. So policies emerge as a result of a whole lot of different things: lobbying, responding to a crisis, capturing opportunities more positively. And this to me says that, you know, management accountants need to get themselves closer to the real mechanics, the dirty business of policymakers, and better able to walk in the shoes of policymakers. I think the other point, again, just building on my earlier comment about distributional aspects, is to recognize that policy decisions typically need to address multiple objectives. And again, this is my operational research background coming out, in a sense that, you know, the objective function that you're trying to maximize could be multidimensional. And again, this comes out when I was with WHO. We were working on, you know, evaluating the performance of health systems, and actually the criterion we came up with, it wasn't without controversy, but it actually said health systems actually seek to deliver along 5 dimensions. Health systems have 5 objectives, and the relative importance of those 5 objectives is really a decision. It's a cultural, political, societal decision. We used to have big arguments in Australia about subsidising private health insurance. Now, from an equity point of view, from an efficiency point of view, that's demonstrably not a smart thing to do. But then if you realise that for some governments, choice is another objective. Choice of individuals is another objective that needs to be fed into that objective function. Then perhaps subsidising private health insurance, which gives better choice, is a rational thing to do. So I think I would just say, you know, don't assume that there is a single objective function. The relative importance of different objectives is absolutely critical. And I think I've got a couple of other, but I'll save them for later, because I think I don't want to go on too much.
Okay, thank you, Philip. Lisa, from a training perspective in CITFA, do you think there are deficiencies in ways that CITFA can work to improve things?
I think there are certainly deficiencies in the way that finance practitioners are perceived in the workplace, and CITFA is trying to change that by training both the finance practitioner and the service manager. And what I mean by that is that we've all seen, you know, accountants are called bean counters, or they're the paperwork police. And when we've been doing things like financial models, the financial management model on site, what we see is that the service managers actively trying to avoid going through finance because they just see them as a blocker. They're not seeing them as being integral to that policy making process. They feel that they haven't got anything valuable to add, and they feel that finance are just going to say, no, you can't do that, or it's not perhaps a rational decision. So people actively try and avoid them. So what we're trying to do within CITFA is to, if you like, educate the non-finance manager. Say, look, every decision that you make has a financial implication. So therefore, your finance colleagues should be your trusted advisors. They may be your critical friends, but they should be at the top table. They should be who you go to when we're looking at policy making, because they can give you a slant on something that actually might be, no, that's ultra vires, you can't do that. And we've all seen, and again, anecdotal comments that come back from finance practitioners, is where a policy or a proposal for a project is made within the public sector, and finance is just told, oh, just have a quick look at the figures, we think they're all right, when the decision has already been made. And that's the moment where everybody has their heads in their hands because they go, we can't do this. You know, there's either you're trying to borrow money that's not available, the way you've structured it, you've double counted the savings, it simply doesn't work. So we can see lots of deficiencies and we are trying to tackle them in the best way possible by training both finance practitioners in what they need to do in terms of improving, for example, their communication skills, but also the service managers in saying, look, finance isn't a blocker, it's there to support you. That's really our strategy moving forward.
Yeah.
Roger, can I just make one comment on the deficiencies very quickly? Yeah, it's an example. I was listening to something on the radio a couple of weeks ago. It's the issue about smart motorways in the UK, and you know we've had problems with these numbers of fatalities and what have you. And my understanding was that what is key to the smart motorways working is that you construct a series of refuges on the carriageway every half a mile or so that if people break down, they can pull off the carriageway and avoid accidents. And what I was picking up was that apparently because of cost pressures, a decision was made to reduce the number of refuges. Instead of being one every half a mile, they did them once every mile or something like that. So that led to situations where people broke down, they had nowhere to go. That caused the accidents. Now, it can't be that difficult to work out the cost of constructing one of these refuges. So I just wondered how we got to that situation where something as mission critical as these refuges were cut back, which caused problems with the whole policy.
Yeah, well, Malcolm, I think perhaps you and I know from the previous book that we did write that difficulties of project management, particularly in the public sector. Projects have, that classically have three things to deliver certain objectives within cost and within time. And 95% of projects fail on one of those things. And when you are under a cost limitation, and when you find yourself having to deliver something on time, the thing that gets trimmed is something within the project. And in this particular occasion, it seemed to be that instead of refuges every half mile, they went to every 1.5 miles.
Yep.
Now, again, this is one of those classic situations where if you looked at the wider objectives, as Philip was saying, you would have taken into account the consequential dangers, the risks of more serious accidents as a result. And you might, with good management accounting, have come up with a different decision about how to handle the project. But instead of just a simple, oh dear me, the accountants are telling us we haven't got any more money, so we have to stop things. I am reminded, Lisa, of the comment that you made about people asking for financial advice at the end of the matter instead of at the beginning of it. There's a classic Sicilian proverb, which is "Dopo il fatto consiglio non vale." When a thing has been done, advice comes too late. Let's move on to the next question then. Malcolm, you've talked extensively in your book about the drivers that are changing.
Yeah.
Would you like to just briefly share what you think are big drivers for the future?
Yeah, sure. Okay. Well, I'll be brief on this. Basically, I'll pick on three, really. One is you've talked earlier, Roger, about the challenges facing public services in terms of pressures and backlog of COVID and climate change and all these sorts of things. They are substantial. And I think that's leading to a situation where we're going to face more complex decisions. We talked about decision making, and particularly I would focus on the need for more complex strategic decisions. I think we're going to have to think carefully about how we deliver services, where we deliver services, who delivers them, how we reconfigure them, how we integrate services one another. These are quite complex strategic decisions which drive management accounting. The second one, I think, is quite obvious, but it needs to be emphasized. It's the impact of information technology. And I'm thinking here of things like artificial intelligence, machine learning, big data analytics. These are going to impact inevitably on management accounting. It'll vary from place to place, but the sorts of things that you and I used to do when we were younger, doing sort of cost calculations with a slide rule or a calculator, that's going to be done by technology in the future. Management accountants, the role of them is going to be very different. And I think the last one, I described this as, and Lisa may comment on this, an expectation that the management accountant becomes more of a participant than a spectator. So instead of just standing by and handing over information and letting other people make the decisions, I think we expect the management accountant to be more of a participant and getting very strongly involved in the decision-making process. So those are the three I think I'd focus on.
Yeah. Phil, have you got any view on that?
Yeah, no, I mean, really just to echo particularly Malcolm's last point about, you've got to be in the room. But equally, you can't just barge in, or you can't claim admission as a right. So I think, being a participant, not a spectator, you've got to earn the right to be a participant. And that, I think, implies, showing that you understand what is actually going on inside that room. So I would, and the automation thing, I think is, I think during the time both Malcolm and I were working for one of the big, I think it was Big Six in those days, you could see that the auditors' work was being automated. And we were very keen at the beginning to say, management accounting is not the same as auditing. But, how much of the management accountant's work will actually be done over time through artificial intelligence. And therefore, does the profession need to reinvent itself to thrive in that? You don't want to become the blacksmiths of the 21st century.
Well, I think this is leading on to the next question, actually, which, Lisa, I wonder if you could look at this one. What Malcolm's talking about here is big drivers, artificial intelligence, better IT. From my perspective, people need to get much more involved in stats. Malcolm and I once did a whole series of lecture tours for CITFA on basic statistics for management accountants to get people familiar with some of the statistical techniques that were involved in these kind of things. So how the role of management accountants is going to get bigger, it's going to get more complicated. What's the kind of implications that CITFA sees for this?
Okay, I think, yes, you're absolutely right. Finance needs to be seen as being absolutely key to strategic management within the organisation. We know we can't make effective decisions if we haven't got good, robust information. So this is where the management accounting comes in. And we need to evolve those particular techniques as well. I also think what we're trying to say to finance practitioners is you need to move away from your comfort zone, which may be just around sort of number crunching. And you need to move into something which you may be much less comfortable with, but actually one where you are very visible and where you are adding value to the organisation. And that's the message that CITFA is giving to finance practitioners. I also think that there's a lot around perception here, and I've already mentioned, the paperwork police, the bean counters, and that perception needs to change from that stereotype of somebody who sits in the corner in a grey suit just working on a calculator to one where, as Philip says, if you don't get right of entry, it's okay. We need these people to open the doors to finance and say, come on in, I value your opinion. I know you've got technical skills, your expert power is in with your financial competence, but also come on in, share that with us and help us in advising on that key strategic management.
Malcolm, anything further?
Well, just one very quick comment to reinforce something that Lisa said is the sort of things we're talking about here about getting out of your comfort zone, getting involved more in quantitative stuff. This is not just for accountancy students who are starting their career today. Lisa used the word finance practitioners. I think we're talking about people who are currently working, who are in mid-career. They're going to have to move out of their comfort zone as well.
Yeah, it's always difficult. It's the question of you may not have to be an expert in everything, but you need to know enough to know when to call in an expert to help you out at sorting things out. Which I think takes us on to the next question, Phil, which I'd like you to kick off with us, which is about the whole question of non-financial managers. Lisa's broadly introduced it and said, they need to get it understand, but how do you think non-financial managers in public services, how well do you think they understand things, and what can we do to improve it? I mean, I don't think you'd ask the question if you expected the answer to the first one to be, yes, they do it well. Phil?
Yeah, no, I think when I reflected on this, I came up with, it sounds a bit of a sort of cliche, but I would say that most of the senior policymakers that I've worked with over the years, I would say, if I had to, you know, obviously you shouldn't generalize, but I will, I would say they were probably financially literate, but not mathematically sophisticated. And I think what I mean by that is, for example, you know, they were generally able to understand the static, but they struggled with the dynamic. So, you know, they could look at a set of numbers and see what those numbers were telling them. But when it came to saying, well, if one of those underlying assumptions is wrong, or if one of those parameters changes, what does that do to the bigger picture? You know, concepts like fixed, semi-fixed and variable costs, I think, you know, you don't have to push too far before people start struggling to come to terms with those. One thing that I think Malcolm taught me many years ago was variance analysis. You know, if the bottom line is changing, is that because of volume? Is it because of quality? Is it because of cost? And again, that's a sort of dynamic aspect that I think quite a lot of policymakers would kind of get, but not fully understand. Apportionment of overheads, I think there's material in Malcolm's book about how, you know, that you could actually, if you change the way you apportion overheads, you could turn something from being very positive to being very negative. And I think people are maybe not sensitive enough to what's implied in some of those areas. And generally, the whole area of sensitivity analysis, you know, how, if you're doing a forecast, if you're doing an estimate, how sensitive is it to the accuracy of the underlying assumptions? One of the things I used to really enjoy doing was building spreadsheets, getting other people to build spreadsheets. And actually, you know, you can get I'm sure this is probably old hat by now, but you can get these add-ins to Excel and so on, which actually enable you to do Monte Carlo simulations on the data. So you actually put in, you know, a whole range of uncertainty around the inputs and see what that flows through to the confidence intervals around the output. And I think most policymakers you'd be pushing at the boundaries of their knowledge. But I think there's a real opportunity there for the management accountant to hold their hand and take them on that journey of understanding. So moving from static to dynamic, things like, again, back to my OR background, you know, simulation models as a way of looking at the impact of policies. I'm not sure that would be part of the sort of conventional syllabus of a management accounting training, but I think there's a real opportunity to capture that space. And then I think that the final one is actually this issue of non-financial measures. Again, Malcolm talks in the book about environmental accounting. And, you know, what about social and environmental impacts of policy decisions? And I finally, a few years ago, I had the pleasure of doing a little bit of work in Bhutan in the Himalaya. And of course, they are famous now as the country that actually accounts for gross national happiness. So, you know, I wonder how many management accountants are equipped to perform an analysis of the happiness impact of public policy, and how long it will be before we actually get a happiness index included in our monthly management accounting reports to the board of directors.
Yeah, it's interesting concept. again, from my sort of economist's background, I recall very much that when Simon Kuznets was asked by FDR, and this is only in the 1930s, to produce the first estimate of GDP, he proposed including in that estimates for things like household tasks that were carried out, which were in a non-market, non-costed basis, and he thought that they should be part of GDP because it represented what FDR was looking for, which was public well-being or national well-being. And at the same time, he was intending to exclude all elements which were to do with banking and finance, which were not related to actually credit transfer and credit creation. Anything which was to do with investing, on the grounds that this was not final output, but only intermediate output, and therefore should be cancelled out in the equations. Unfortunately, we've ended up with an analysis of GDP, which only covers things that you can cost on a market basis. So, for example, social care has been plagued for a long time by a situation whereby if we pay for our mother or father or whatever to be in a care home, that counts as GDP. But if we care for them at home, it does not. And therefore, when people save costs, inverted commas, by putting pressure on people to look after their elderly relatives at home, that is actually an improvement as they see it, but it's not. All it's done is it's shifted it to another part of the economic or the economic output. So yes, you're perfectly right, Phil. It's taking this wider element, and it's quite a significant challenge to that. Now, Lisa, you talked a little bit about getting in there as a management accountant in the early stages of a discussion, not coming in at the end, and improving financial managers' financial knowledge. There used to be, did there not, a course which CITFA ran, which was Finance for Non-Financial Managers. I can remember sending some of my highways people and asking them to attend that course as a way of improving the costing elements of highways. CITFA still running that? Have we developed it? Has it improved?
Yes, we are still running it in many different forms. It's actually now tailored for many different organisations. And interestingly, Roger, only at the end of December did we run a pilot for one particular county council for their non-finance managers. And what we've done is we've actually set the whole day up with an imaginary case study. And what delegates have to do is work through that case study. So rather than it being a very theoretical or academic course, it's actually quite a practical course with a real scenario in that relates to that organisation. And they have to run through all of the various financial aspects. And the feedback we've had is this is great because it actually feels like real life. We feel like we're really learning something here, much more than if you'd have delivered just a series of bullet points to us. So yeah, that's still running. Just like to pick something up when you talked about the economic aspect within our business case training that we deliver. Many actually of the management accountants as well as the non-financial managers really struggle with that perception of the economic case. And we are looking at the qualitative data and whether we can put a monetary factor to that. And a lot of the accountants will dismiss at first glance anything that you can't easily put a pound sign against. But of course, if you're doing a good business case, then you are looking at the wider economic aspects of that, not just the financial case and the affordability. So I think it's not just the non-finance manager that struggles with some of those issues. I also think some of the management accountants think, well, I can't get a pound sign to it, so therefore I'm just going to ignore it. So I think that's perhaps something we need to develop as well.
Yeah, that takes us on very nicely, Lisa, I think, into our next question to look at as a panel. The particular techniques. Malcolm, what do you think about the particular techniques of management accounting that you see as becoming more important in the future? what is the, if you had to choose your top three, what would they be?
Oh, top three. Well, I'll pick one first of all. I'll talk about cost analysis, particularly strategic cost analysis. If we look at costs, not operationally as they are in the short term, but in the longer term, how we can change the cost structure of the organization to deliver services the same standard or better, but at lower cost. And that means looking at the bulk of the costs and how they break down. I think I mentioned life cycle costing. I think is another important one. And I'll hand on to Lisa for that. I think she might have some more ideas.
Okay, Lisa, there you have the baton has been passed.
Yes, actually, Malcolm in his book has a really handy list of strategic, tactical, and operational techniques, which I think is excellent. But I think just to pick up what Malcolm has said, because many organisations are moving towards a more commercial outlook, people need to be more aware of some of the commercial aspects of that. So things like VAT, is it recoverable? Maybe even corporation tax, should they be moving to something that's very profitable and it's outside the realms of the local authority. Sensitivity analysis as well, I think, ratio analysis. These are some of the techniques that are not mainstream within the public sector, but they are becoming much more needed as we move into this very different and very diverse landscape because of all the pressures that we're seeing, notably the pandemic and austerity. So I think that's where I would go. Some of the less used techniques that we probably all did when we were qualifying, but then we thought, oh, we'll never use those again, and suddenly they're coming to the fore and are much more critical.
Yes, it's curious how these things come back to you, and in a later career. I distinctly remember at one point talking again to sort of highway engineers, and we were having a long discussion. I was the chief executive at the time, and I was sort of talking to them, and they were talking about some of the problems that they had in working out flows and things through junctions, and I presented it to them and said, well, think of it as a queuing problem, using queuing theory, and there was a sort of bafflement, and then someone said, I did that, didn't I, when I sort of did my highways qualification? I've forgotten about that. So we went through the thing again. It was, looking at a problem which seemed to be sort of technically difficult and insoluble in a different light, using a different technique, can sometimes give you a bit of an insight into that. Phil, do you want to add anything to the conversation here?
There's a couple of points I could make, but I've just seen popped up that we've actually got some questions from the audience. So I think, in fairness, we should throw it over.
We should then move over if you've got some questions that that need to be answered. So, okay, shall we?
We do indeed have questions, Roger. First of all, clearly the political context can lead to the risk that decisions are being taken with a short-term focus, i.e. based around electoral cycles. How do you feel the sector can embrace longer-term decision-making in a political world?
Who'd like to kick off on that? Malcolm, would you like to say something on that?
Well, two things. I'm not being naive in saying this, because I worked in politicians all my life. I mean, what would be ideal, but I don't think we're going to get it, is it in some areas, if we could get some sort of bipartisan approach to public services. I mean, we have generally, if you look at foreign policy, we generally have a bipartisan approach to that. But when it comes to the health service, it doesn't seem so much of a political football. But I think the other thing I would say is that to avoid sort of politically weighted decisions, we need to focus on the evidence. If there's not sufficient evidence against the particular path the politician wants to go down, it's difficult to stop them. But if you've got very strong evidence and very strong data, that might make them think twice before going down that road. So I think getting the evidence and the data is really important.
Yeah, I think there's always an inevitability that sometimes politicians think no further than the next election, but actually many politicians have a much wider perspective than that in terms of serving their communities. I was particularly struck with a conversation that Malcolm and I were having not too long ago about how the Welsh Assembly had set 9 very important political objectives, and one of them was a major environmental objective, and another one of them was ensuring that there was a future for the children now being born in Wales,
future generations.
Future. So one of those things indicates, I think, that sometimes you can engage politicians, not in saying, well, you shouldn't, you're thinking too short term, but asking them to raise their perspective. And I think you very often that can happen.
Just one thing to add, Roger, I think we also have to remember as well, even in the private sector, there is politics. It's not party politics, but there is certainly politics of different groups in the organisation, different professions, these sorts of things. So it's not completely in public service.
I think the point I would say in answer to that question is to put it bluntly, live with it. I mean, that is, that's the price we pay for democracy, and it's a price I'm very willing to pay, because I think democracy is a pretty good system. But I think there's also another D at play here, which is Darwinism, in the sense that good policies, there's a sort of survival of the fittest when it comes to policies, and good policies will survive political change. But I think it is a reality, and it's a reality in a sense we should all be very grateful that we face that problem.
Yeah, democracy is the contention of ideas with the perfect knowledge that if something doesn't work, and you can prove from the management accounting version it hasn't worked, then that group goes out and another group comes in with a different set of ideas. That's how it works.
Yeah.
Do we have another question?
We have a few, yes. So what are the key differences between management accounting and finance business partnering?
Who would like to kick off? Lisa, would you like to take a stab at that?
Yeah, Ashley, can you just repeat the question, Ashley? You just broke up there slightly.
What are the key differences between management accounting and finance business partnering?
Right, thank you very much. So there are lots of similarities, certainly, and a finance business partner will need to be a good management accountant. I think that the only slight separation will be a finance business partner has to excel within their engagement skills. So a finance business partner is not able to add value to the organisation if they cannot engage with it. So communication skills are absolutely critical. They need to be very succinct in communicating their insights and being able to add value, deliver solutions to their clients. So a management accountant might be somebody that just does the figures, if you like, is very good at the data analysis, provides the interpretation. The finance business partner will need all of that, but they sit between the pure finance and the business unit. They need to understand what the business is doing. So it's an added element, if you like, of good skills and behaviours. As I mentioned earlier, good emotional intelligence, written and verbal communication skills. So knowing how to react in different environments with different issues and to different people. So I wouldn't say they're two separate things. I would say a finance business partner needs to be a good management accountant.
Thanks. We've got a few questions from folks. So we may just run over a fraction to try and get as many of those questions in, and I'll invite one of us to speak to their questions so that we don't take too long on them. So can we have a next question?
Sure. Do you see scenario planning / forecasting becoming much more important, thinking about greater post-lockdown working from home and a large-scale fire sale of office space?
Malcolm, what do you think about that? Straight
answer is, I hope so. I hope so. There was Roger and I did, and another lady, Manchkala, did something for SIP for a few years ago about financial forecasting. It was a guidebook, and I remember picking up then really the National Audit Office had done a study of forecasting in central government and was very critical of the standards of forecasting and scenario analysis in central government. Now, I'm not naive enough to suggest that local government and health service is perfect, and so I suspect that yes, there is huge scope for improving these sorts of techniques in the future. And I think we're back to the quantitative side as well, having the skills in that area.
Okay, do you have the next question?
With the tensions in public services between resource constraints and demand, values-based leadership across the accountancy profession comes to the fore. Do you think we have the professional confidence and training to support values-based leadership?
Lisa, do you think we have?
I think I might say what Malcolm says, and says I hope so. Yeah, and it's, you know, it's a mixed bag. It's I do think people do have that. I think having the confidence to deliver it is not the same as not having the competency to deliver it. And some people just need a little support with that confidence aspect.
Yeah. Can I just add to that very quickly, Roger? I think Lisa's absolutely right. You can train people as much as you like, but they need to be in an environment where they're supported. So if the leader of the organization doesn't demonstrate those values, it's difficult for other people to do it.
That's very true. Yes, culture is all, and many of these things, as my experience has borne out. Can we have another question then?
Many people argue that much of the excessive cost in the NHS was caused by the internal markets. What impact do you think the government's changes to the NHS internal markets will have in respect of the need for management accountants?
Phil, you have a lot of experience in, on the health side. What's your take on that one?
Yeah, I think I would say that the internal market, I don't want to call it controversy, but I don't think the case was ever proven in either direction. Certainly, in fact, going back to the point about changes of government, I had the interesting experience in New Zealand of introducing an internal market and then being involved a few years later in taking it apart. And my view was always, it never really got a chance to demonstrate what it could achieve. Again, I think it's also goes back to my earlier point about, there may be multiple objectives at play here. And, while an internal market might potentially, hypothetically increase costs, if it actually raised quality or responsiveness, then maybe those costs are not just, they're not just on the negative side of the ledger. In terms of, the reforms that were just mooted a couple of weeks ago, I'm certainly very attracted to this notion of the integrated care system at the local level, bringing together health and social care. I worry that we may not have the human resources to be able to straddle that. But I mean, they've been two very separate worlds. Now we're expecting people to take on leadership roles that straddle those two worlds. And I'm not sure we've necessarily got the people. This is not a management accounting question, it's a leadership question, really. But it reminds me when we did introduce the internal market back in 1989, we had loads of people who were good at delivering services, but there was this whole new area of activity, which was purchasing or commissioning services. And no one had ever risen to the top in the NHS by being good at doing that. You got to the top in the NHS by being good at running hospitals. And so suddenly we needed a whole lot of people who were almost the counterparty to the hospital runners, the hospital managers, and they didn't exist. And again, I think there's as I say, much broader than finance, but there is a question around: have we got the human resources, the intellectual firepower to effectively manage better integrated services?
Can I add something there, Roger? It's to add to that, really, and you'll know this is a pet project of mine. I think one of the problems we have in this country is we come up with solutions for things and we try to apply them uniformly across the country, and they don't always work. Now, if we look at internal markets and we look at the basic needs of a market, an efficient market, we're looking at things like perfect information, sufficient suppliers and purchasers, these sorts of things. Now, what I'm coming on to is maybe the internal market might have been appropriate in London or Birmingham or Manchester. I don't think it was very appropriate in Cumbria or Northumberland or North Wales, these very rural areas where there's not many suppliers around.
Yeah, yes. Maybe what we need is a much more flexible system, which is more regionally organised. But that, as they say, is a different discussion. So shall we move on to another question? If we can just take a couple more minutes before we close, but we'll take a couple more questions.
Sure. The point Lisa made about the negative perceptions of finance officers and managers is an excellent one. Given the significant reductions in funding and the challenges caused by COVID, the environment for performance improvement is both incredibly important but also exceptionally difficult. Chapter 11 of the book discusses this issue in an excellent way. Please could the panelists discuss their view of how best performance improvement can be prioritised in this challenging environment? Malcolm,
chapter 11, you wrote it.
I'm quickly going to open it up and read what I said. What to say? We haven't got many alternatives, have we? Other than we'd have to try and improve performance. We can either just carry on cutting things as we've done for the last 10 years, or we can try and improve performance. There's many ways of improving performance. I think Roger will remember something he and I and several other people wrote a few years ago, which we called strategic financial leadership. And we were looking at the time as how public authorities had coped with the early years of austerity. And I think the basic answer is very well indeed, given the sort of pressures. But what we noted was that the sort of improvements they'd made, the performance improvements and the cost savings tended to be the sort of low-hanging fruit, the relatively easy things to do, the operational things. And as I'm repeating myself, really, I think the focus in the future, we have to look at major strategic changes to how we deliver public services and find a way where we can make big savings, not little savings, because those little savings are not there anymore.
And if I can just come in with one quick, again, I'm stuck record mode here, but performance is not unidimensional. So we've got to make sure that performance improvement doesn't just become cost reduction. There are different aspects, and in fact, I would say, if anyone asks you as a management accountant how to improve performance, I would come back with a rejoinder saying, define performance. Which aspect of performance would you like me to improve? Because there is not a single.
I used to have a slide which I put up talking about performance improvement, which used to have about, I'm trying to remember the detail, but it started off as doing much more with a bit more, doing the same with less, doing more with less, and all of those were a different alternative. They were all different aspects of performance improvement. One of them was, and it was always there, was doing much more with a little more. And that was as much a performance improvement as the cost saving, doing the same with less, just as well. I think, judging by the time that's going on now, perhaps we can have one more question and then we'll wrap up this particular session.
Sure. The panel talk about bringing non-finance colleagues on board and accountants get more involved with the service teams and decision making. How can we achieve this? If management accountants struggle to engage with them in the first place, many people feel that funding for any project is a finance problem and not theirs, as they are not accountants.
Lisa, you nodded.
I'm nodding and smiling because, yeah, we hear that. I think it's important to recognise and to reiterate many times to the non-financial manager that they are accountable for their budget. They are the budget holders. Finance are not. So every decision they make impacts on their money. Finance is there to support them. And I think how we can improve that is to provide the non-finance manager with as much support and as much training as possible to enable them to do that. Ashley, could you just repeat the first part of the question? Because I know it's a very long question, that one.
Sure, 1 second. So effectively, how can accountants better engage with their non-finance colleagues in order to overcome barriers?
Yeah, so this is about building up relationships and trust. And there is no magic solution and there is no quick fix to this. This is about the management accountant stroke finance business partner engaging with their stakeholders, whoever they may be, and learning about good communication, and whether that's written, whether that's verbal, and adapting how they deliver in terms of their materials, in terms of the information provided to the right clients. So giving somebody a spreadsheet that's got 15 different columns in, which you think is fantastic as a management accountant, actually your client might go, you know, I just want to know how much I've got left. I just want one column, Lisa. I don't want these 15 columns that flash every time I change a figure. So I think understanding what your client values and working on your behavioural skills is critical to break down those barriers.
Very quickly, Roger, if I may, I think the other important thing is to take the time to understand what your internal client does, whether they're a surgeon or an educationalist or an engineer, or you've got to spend the time understanding their work and what they do, and perhaps observing what they do as well.
Yeah, I was making very much the same sort of point, Malcolm. Yeah, I think there's nothing better than actually getting out of your office and going into their office and going and seeing what's happened. I will tell this brief tale, I hope. This relates to a statistician who was trying to collect data in the National Coal Board from managers, or rather stock managers, who operated in storerooms underground, and they were dealing with things that were needed in the mining process, so people couldn't go up the shaft to collect a new whatever it was. And the stockman would there, and one of the things that he had was a large drum of oil, which was used to prop up the jacks that were necessary to hold the rock up at the face, to make sure that the jacks there were strong. And people would turn up, and he would pour out the oil into jugs and things, and they would take it away and put it into the jacks to keep the mining up. The statistician couldn't understand, because he'd given him books and sheets to fill in, that it was hopeless, because, you know, down there it was just too dirty, people to fill paper records. So the statistician went and sat with the man doing the job, and he noticed that, you know, things came up, and they used to write in the book how much he'd issued, and they said to him, he said, "Do you have a measuring jar for this?" "Yes," he said, "I have a jug. I don't use it." He said, "Well, do they come up with the same sort of size of tin every time?" "No, no, they come with all sorts of things, different sizes." He said, "That's what happens." So he said, "Well, do you have a measuring rod?" He said, "Yes." He said, "Don't use it." So he said, "Well, why do you write down? Do you just sort of guess what it is?" "Oh, no," he said, it's easy." He said, "It's 10 glugs to the gallon." When he tipped the thing up, he went like that, and then he calculated that. And he said he was very worried because he was going metric. And the statistician said, "Well, I can help you with that." He said, "It's 2 glugs to the litre." And he was delighted. Now that is getting alongside your guy and giving them relevant information. And it's always a good thing to do, is to get alongside your people, see them in the place where they are, and listen to the issues that they face, because that will help you deliver information which is actually useful to them, as opposed to information which you think they should be providing to you.
Well, very, very quickly, Roger, if I can add, some years ago, I was doing some work on costing of cardiothoracic surgery in hospital. And the consultant surgeon I was working with just suddenly said to me one day, he said, "Do you want to come and see an operation?" So whether he thought I would chicken out or something, but I said, "Yeah, sure." So I went and saw, it was actually a six-hour complex operation, and I stood all the way through it. And I have to admit, I learned a lot. Well, the one thing I learned was surgery is physically hard work. You know, to stand there all that time concentrating and doing these very intricate tasks, it's really hard work.
Yeah. Anyway, I think enough of these little anecdotes. We've let our thing run on quite a bit, but it's good. And if you haven't asked a question and we haven't been able to get to your question and reply to it, then we'll noting those down, and hopefully we'll be able to send people emails or comments if we get a list of the outstanding questions, and we'll try and answer those as best we can. In the meantime, congratulations, Malcolm, on producing what is going to be an excellent book, and one which I hope students and practitioners are going to find useful. And with that, I think we're going to draw this panel webinar to an end, and say thank you very much to everybody. Thank you for the panelists for their contributions, and thank you for your attention and for your questions. And with that, I think we conclude the session. Thank you very much indeed, everybody.
Thank you.